all members' opening statements will be made a part of the record. The chair notes that some members may have additional questions for this panel, which they may wish to submit in writing. Without objection, the hearing record will remain open for 30 days for members to submit written questions to these witnesses and to place their responses in the record. We will now go to our opening statements. I am pleased to be holding this very important hearing examining ongoing concerns over the United States Mint's bullion coin programs. Given the financial difficulties of the last few years and the possibility of large-scale inflation due to the Federal Reserve's quantitative easing programs, it is not surprising that many investors are rushing to purchase gold and silver coins. As the world's largest mint, supplying one of the world's largest markets for bullion coins, it is imperative that the mint be able to supply the bullion market with an adequate quantity of coins. Our witnesses represent various sectors of the coin industry, each with a unique viewpoint, and I look forward to hearing their perspectives on the Mint's bullion coin programs and their suggestions on how to improve the Mint's efficiency. For planchet shortages and minting stoppages has often been focused on the Mint and its procedures for planchet purchases, coin marketing, and bullion sales. In a market as potentially volatile as the precious metals market, and given the Mint's status as a self-funding agency, it is understandable that the Mint does not want to store millions of ounces of precious metal planchets whose dollar values could conceivably drop by the time they are minted and sold. However, this uncertainty and the cyclical nature of coin sales makes it difficult for planchet suppliers to gauge future demand, meaning that they are less likely to invest in capital equipment to increase production. Thus, with a huge upswing in demand, as we have seen recently with Silver Eagles, the Mint is unable to source enough planchets, and the rush to produce enough 1-ounce planchets leads to a reduction in resources available to produce 5-ounce planchets, proof planchets, etc. Silver and gold are in an unprecedented bull market right now, with Silver Eagles selling at a rate that, when annualized, would mean sales of 48 million coins this year. Considering that total American silver production is only around 40 million ounces, this would be a significant sales figure, making it all the more important that the Mint minimize disruptions. I look forward to the testimony of our witnesses. And now I will yield for an opening statement to the ranking member, Mr. Clay.
Thank you so much, Mr. Chairman, and thank you for holding this hearing regarding the U.S. Mint's bullion coin programs. And thank you to the witnesses for appearing in front of this subcommittee on domestic monetary policy. After reading the witnesses' testimony, I look forward to their insight regarding those problems they have identified at the U.S. Mint and what corrective measures should the U.S. Mint make to address these problems. Also, I noticed that no representative of the U.S. Mint is appearing in front of the committee for this hearing, and at this time, Mr. Chairman, I'd like to reserve the right to have a comment period so that the U.S. Mint can make comments in regards to this hearing for the record. And thank you so much, Mr. Chairman.
Thank you. Does anybody else care to make an opening statement? Okay, we'll proceed to hear our testimony. I would like to welcome the panel today and looking forward to hearing their testimony. And without objection, your written statements will be made part of the record. You will be each recognized for a 5-minute summary of your testimony. I'd like to go ahead now and introduce our panel. And we have 4 panelists here today. First, we have Ms. Beth Deischer, is in her 26th year as editor of Coin World, the leading publication of collectible coins. She is author of Making the Grade, a grading guide to the top 50 most widely collected U.S. coins. Ms. Deisher is often interviewed by the media as a coin collector spokesperson. We have also Mr. Terrence Hanlon, president of Dillon Gage Metals Division, located in Dallas, Texas, one of the largest metals dealers in the U.S. and an authorized purchaser of the U.S. Mint. A leading expert on precious metals and gold coins, Mr. Hanlon has worked closely with the world's major mints and is called upon by gold and silver councils for market and product evaluations. We also have Mr. Ross Hansen here today. He is the founder of and CEO of Northwest Territorial Mint, the largest private mint in North America and an authorized retailer of U.S. mint bullion coins. Mr. Hansen has been in the precious metals business for 35 years and in 2009 acquired the Medallic Art Company, a minting facility that used to produce silver blanks for the U.S. Mint. Mr. Raymond Nessim is CEO of Manfra, Tordella, and Brooks Company, a precious metal wholesale distributor and authorized purchaser of the U.S. Mint and an official distributor for government mints around the world. Since the 1960s, Mr. Nessim has held positions with various firms managing and directing precious metal investment. Once again, I would like to welcome the panel, and we'll proceed to the first witness, Ms. Deisher.
Thank you, Mr. Chairman. I would like to thank you and the subcommittee for inviting me to testify here today. During my career, I have been privileged to chronicle the U.S. Mint bullion coin programs from their origin in the research and recommendations of the Gold Commission in 1982 to the passage of legislation authorizing the American Eagle gold and silver bullion coins in 1985, to the gold bullion coin first strike ceremony at West Point on September 8, 1986, and then through the twists and turns of the ensuing 25 years. Since CoinWorld's largest constituency is comprised of collectors, my testimony will articulate the views of collectors, who often are also investors. The quality of the silver, gold, and platinum bullion coins produced by the U.S. Mint is exceptional. However, the marketing of these coins is subpar and often disruptive to the marketplace. Most of the Mint's problems in marketing bullion coins are rooted in an ongoing failure to understand who its customers are and why they purchase the bullion coins. In my written testimony, I have cited a number of problems. In this short time frame, I would like to emphasize solving those problems and making the bullion coin programs better. These recommendations include: the U.S. Mint should avoid purposely creating rarities. The U.S. Mint should spend time and resources to better acquaint its marketing staff with its various customer constituencies for bullion coin products. The U.S. Mint should better inform its customers as to when its coin products are going to be available in the marketplace. The U.S. Mint should mint to demand by allowing a certain number of days for collector versions of bullion coin products to be purchased and or ordered. The U.S. Mint should increase bandwidth for its website to facilitate the handling of high-traffic ordering periods. The U.S. Mint should secure more planchet suppliers and better plan procurement and manufacturing so as to avoid disrupting profitable and popular coin programs. The U.S. Mint should exercise care in scheduling bullion coin sales so they are more evenly paced throughout the year and not dump into the marketplace near the end of the calendar year. The U.S. Mint should take a more active role in providing the public with consumer alerts regarding any of its products that might be subject to questionable marketing practices in the secondary market. The U.S. Mint should place mint marks on all of its bullion coins to identify the mint of manufacture. Such would preclude misrepresentation and possible fraudulent practices in the marketplace. We will also recommend that the U.S. Mint create a standard protective capsule option for housing all of its collector version bullion coins. Thank you again for the opportunity to testify, and I would welcome any questions that you may have.
Thank you very much, and we'll go on to Mr. Terrence Hanlon. Go ahead and proceed.
Chairman Paul, Ranking Member Clay, and members of the subcommittee, I would like to thank the subcommittee for the opportunity to appear before it today to discuss the United States Mint's Bullion Coin Program. It seems appropriate for Congress to take stock of this important program at this time, as 2011 marks the 25th anniversary of the introduction of the American Eagle bullion coins. Congress created the world's most successful bullion coin program with its passage in 1985 of the Statue of Liberty, Ellis Island Commemorative Coin Act, and Gold Bullion Coin Act of 1985, which authorized respectively the American Eagle silver and gold bullion coins. Since the product launched in 1986, the coins have become the dominant bullion coins in the global market for physical bullion coin investments. Dillon-Gage Metals is one of the largest precious metals dealers in the United States. Our Dallas-based firm is proud of its affiliation with the United States Mint as a key distributor of its American Eagle gold, silver, and platinum bullion coins. We look forward to the introduction, hopefully later this year, of a palladium coin to the program as a result of Congress' passage last December of the American Eagle Palladium Bullion Coin Act of 2010. Over the past 25 years, the Mint has produced bullion coins of exceptional beauty and quality. Their marketing team has built a strong brand for the Mint's bullion coin line of products, which are recognized and desired the world over, and has established an unrivaled distribution network. The Mint is to be congratulated on these accomplishments. This is an extraordinary time for the global precious metals market, as demand for these metals climb and prices are at or near record highs. This demand can be traced back to the international financial crisis that began in 2007 and further fueled by economic uncertainty, jittery equity markets, and the looming threat of inflation. Many investors in physical precious metals products prefer the size and convenience that coins offer, as well as the imprimatur that the National Mint provides. Overwhelmingly, investors choose the American Eagle bullion coins, and they do so for three key reasons. First, the coins' weight content and purity are guaranteed by the U.S. Mint and the U.S. government. Secondly, there's a liquid market for these products because of an established network of authorized dealers that ensure a two-way market. Thirdly, the exceptional beauty and quality of the coins make them desirable. As a result, at times the Mint has exceptional demand for its gold and silver products, but it has at times been unable to keep pace with the demand due to an insufficient supply of coin blanks. This has led to disappointed customers and resulted in market share losses to other Mint's bullion products. The Mint has taken steps to address its supply difficulties by adding additional capacity, but it still struggles to meet demand, particularly for the Silver Eagle bullion coins. An adequate supply of blanks caused the Mint to forego production in 2009, an inadequate supply of proof versions of the American Eagle gold and silver coins because of a requirement that gave priority to the production of bullion coins over proof collector coins. Fortunately, Congress addressed that problem with its passage of the Coin Modernization, Oversight, and Continuity Act of 2010 and provided the Mint the authority to produce collector, uncirculated, and proof American Eagles, even in times of unprecedented demand for the bullion versions. The Mint also experienced problems with its rollout late last year of the American the Beautiful silver bullion coins. The problem highlighted weaknesses in the communication between the Mint and its authorized purchasers and the broader retail dealer community that the Mint relies upon to sell its products to consumers. The Mint should be encouraged to work more closely with its distributors and to have regular dialogue with them. In doing so, it will help the Mint to better gauge the market conditions for their products by hearing firsthand from those making the markets for them. The anticipated introduction of a Palladium American Eagle coin this year will bring a new dimension to Mint's bullion offerings. It will offer investors an attractive price point in relation to silver, gold, and platinum with different supply-demand factors for the material. I believe investors will welcome the Mint's resumption of the production of the Platinum Eagle this year, which the Mint halted at the end of 2008. Additionally, it would be fitting to mark the 25th anniversary of the American Eagle program with production of a 4-coin collector set comprised of a gold, silver, platinum, and palladium Eagle coin. Congress could give a further competitive edge to the American Eagle bullion products by adjusting the capital gains tax treatment on these investments to make them on par with securities. The 1981 passage of the Economic Recovery Tax Act created a category of collectibles within the Internal Revenue Code, which includes precious metals. This change in the tax code caused precious metals investments to be taxed at a different rate than that of investments in equities. As a result, current tax law imposes a maximum rate of 28% on long-term gains on precious metals bullion investments rather than the maximum 15% levied on securities and mutual funds. By lowering the rate, Congress could substantially boost the market potential for the American Eagles. Again, I want to thank the subcommittee for the opportunity to be before it today. I would be pleased to answer any questions you may have.
I thank you, Mr. Hanlon. We'll go on to Mr. Ross Hansen now.
Thank you, Chairman Paul and Ranking Member Clay and members of the committee. My name is Ross Hansen, and I am founder and CEO of Northwest Territorial Mint. I have personally been in the precious metals business industry for 35 years, and I founded Northwest Territorial Mint in 1984 as a full-service integrated mint. We are the largest non-governmental mint in North America, and we not only produce our own brand of bullion products, but we are also a retailer of a number of different governmental bullion products, including being an authorized retailer of the United States Mint bullion coins. 2 years ago, I acquired Medallic Art Company, which was at one time a primary producer of silver blanks for the U.S. Mint. And in full disclosure, my company makes a number of challenge coins for all levels of military, many government agencies, including numerous members of Congress. Because of my experience in the private sector, I've been asked to testify before this committee regarding the bullion coin program of the U.S. Mint. As you may know, the U.S. Mint began its program in 1986, but it's only been in the last 3 years that demand for the silver American Eagle bullion coins has exploded to unprecedented levels. Many social and economic factors have contributed to this dramatic increase in demand, not at least of which is the public's perception of an imploding U.S. dollar. In recent years, the U.S. Mint has often been unable to meet the increasing demand for its bullion product. The frequent shortage of these products has led to the following problems. Number one is the premium charged by the authorized U.S. Mint distributors have fluctuated wildly. 2, sales have been lost, which decreases the amount of revenue to the U.S. Mint. 3, the bullion programs of foreign governments have been allowed to penetrate into the U.S. market. And 4, the protection problems have created a widely held negative perception of the U.S. Mint. The cause of the Mint's inability to make enough bullion products to satisfy demand can be traced directly to its supply chain, specifically its supplies of silver blanks. For example, up until recently, the United States Mint was using a single source for its silver blanks. This single source had known limitations in its production capacity and could not expand its production to meet the Mint's needs. Rather than working to develop a domestic pool of vendors for these raw materials, the U.S. Mint has contracted with the Perth Mint in Australia, half a world away, to make up the shortage. Any business would recognize that this adds to the cost of the material, transportation, and significantly increases the length of delivery. I am not here today to merely point out the obvious shortcomings of a program that I have a high regard for. Instead, I would like to see the American Eagle Bullion program continue to grow and succeed. For this to happen, I offer the following solutions for your consideration. Number one, the U.S. Mint should create an industry advisory group comprised of experienced minting industry professionals who are intimately familiar with the material and processes employed by both government and private mints. This group should include suppliers of both the equipment and raw materials that are used by the industry. This group would be distinct from an existing advisory group that deals with coin design issues. The group I am proposing would help with coin production issues. Two is the U.S. Mint should engage in an aggressive vendor development program to assure that it has multiple domestic suppliers to meet the Mint's growing needs. Three, as part of the vendor selection, the U.S. Mint should ensure that its vendors have an elastic capacity. That is, they have the ability to expand production and supply blanks as needed. And four, the U.S. Mint should maintain a larger inventory of bullion blanks and finished coins in order to better respond to surges in demands for its product. And five, the U.S. Mint needs a change in attitude. They often have displayed an attitude which used to be attributed to the phone company of, we don't care, we don't have to. Their attitude towards vendors and authorized purchases is often described as surly and arrogant. It is my opinion that these recommendations, if implemented, could help to make a good program into an excellent one that would fill its congressional mandate to produce high-quality bullion products in sufficient quantities to meet the demands of an ever-changing market. Thank you for letting me share my thoughts with you.
I think the gentleman will go to Mr. Nessam.
Mr. Chairman, members of the committee, the subject matter being bullion coin programs of the United States with a question, how can they be improved? The answer to the question will always be yes, they can be improved. Established measurable goals can always be improved by means of flexibility and transparency. Silver Eagle's recent short-term supply probably is caused by domestic fabrication capacity of silver blanks. This issue may be addressed by extending some flexibility to U.S. blank fabricators in order to help them invest in additional capital equipment for increased capacity. Maybe flexibility simply in the form of a minimum quantity order guarantee per annum for a certain period of time. With regard to the America the Beautiful silver coins, the issue was not that of distribution, but rather that of supply. The United States Mint has effectively built up great anticipation for the new 2010 silver America the Beautiful sets. Expectations were that the Mint would mint sufficient quantities to satisfy potential public demand. Instead, the Mint announced only in December of 2010 that they were able to fabricate only 33,000 sets. As wholesale distributors, the day we were notified of our allocation, we proceeded to sell part of our allocation to several retail dealers, as we normally do. Later that same day, or maybe the following day, we were informed by the Mint that allocations were canceled and that they will relaunch the program, accept orders on December 10. The smaller than expected mintage prompted some retail dealers to offer these coins on their websites to the retail public at very high prices. We had to cancel our sales agreements, which placed us in a very embarrassing predicament. To protect the U.S. public from potential price gouging, the U.S. Mint issued new directives on December 9th, 2010 to the APs, requiring them to A, make available for sale directly to the retail public all their allocations, limit profit margin to no higher than 10%, enforce a limit on coin design and sale for each household, not sell any such coins to neither own company officers nor employees. Despite the problems which this has caused, considering, in our opinion, that the Mint has done the right thing and made the right decision, These directives created three problems for us, namely, 1, risk of being accused of price fixing, 2, not be able to hedge the silver content of our purchase, which is our norm, consequently be left exposed to price risk decline, 3, as wholesale distributors, we were not adequately equipped at the time to sell one coin, each design, for each household. Under the circumstances, the Mint acted promptly, decisively, and did what it had to do to counteract delayed production and limited mintage. If there are any lessons to be learned from this experience with reference to can they be improved, maybe providing APs with reasonable price notice change or mintage problems, minimize surprises by means of regular, open, transparent communications with the APs regarding marketing plans, fabrication, or minting obstacles, or any other difficulties. And C, allowing the Mint more flexibility by lifting some legislative restrictions, allowing them to operate a little bit more like a commercial entity. In conclusion, and in our opinion, the current middle management of the Mint, be it bullion procurement, precious metals, contracting, production, or manufacturing, consists of very experienced, qualified, and dedicated individuals. What appears to be void in our experience is a senior chief executive with sufficient authority to act and report to a political appointee and to a board of directors comprised of a cross-section of specialists with commercial experience, U.S. blank fabricators, and U.S. authorized purchasers. Thank you.
I thank the panel, and we'll go into the session for questions. I'll yield myself 5 minutes. First off, I would like to mention one of the reasons I think we're here today and we're concerned because we have a shortage of coins and there's a high demand and the Mint hasn't been able to keep up. That seems to be the major problem. And then the question is raised is how things are distributed and how things are managed and what is the responsibility of the Mint. But in many ways, what we're talking about here is a reflection of what we're doing to our money. I mean, this shortage is a consequence of the debasement of a currency. Of course, there was a time when there was fixed exchange rate between the paper and the coinage when the coins had actual value, gold or silver. And in the 1930s, in 1933, of course, there was a devaluation of major proportions, and a dollar went from 1/20th of an ounce of gold to 1/35th of an ounce of gold, and then gold was made illegal, and it was fixed for a long, long time. In the 70s, we had two fixed devaluations. It went from 1/35th of an ounce to 1/38th of an ounce of gold, and then it was redefined 2 years later in 73 to 1/42nd of an ounce of gold, and then after that, the debasement of the currencies went to the marketplace as gold was legalized. So we've had steady debasement of the currency, and now, as some of you have already mentioned, the economy has a lot to do with people are worried and concerned, and how do they preserve their wealth? So there's been a high demand for silver and gold to the point where now there are shortages. But the problem is a technical problem on how to deal with this, but ultimately, you had a sound currency, this would be a non-event. It would be a non-problem. But right now, when you think about the debasement of this currency, it's been horrendous. 1/20th of an ounce of gold to 1/1460 percent of ounce of a gold. I mean, that is huge debasement of our currency, and people are struggling and just wondering, what do you do when a government does this to its money? But anyway, I would like to see it facilitated, that people can help take care of themselves, because before 76, it was illegal to do this, to actually buy coins and buy gold coins, and then you went to jail if you bought a gold coin. But I do want to ask a general question to the panel, if you would. I know you've touched on this already, but just if you could briefly explain to us the distribution network. how does it work from the time the Mint does something and until I can go get a coin in my pocket? Would one of you volunteer and describe to me exactly how that works?
Sure.
Mr. Hanlon.
Yeah, I'd be happy to. The Mint has authorized purchasers, of which we are one. So the product comes from the Mint to us as an authorized purchaser, and we have the responsibility of making a two-way market, both providing that product to dealers who are providing the product directly to the retail customer. And as well, we have a responsibility to make a buyback that is reasonable, so the spread between the bid and the ask is a reasonable number, close number. So it also maintains a liquid market. So it takes 3 steps. It comes to the authorized purchaser. We then distribute to the dealer, sometimes a wholesaler who will distribute one more time. But normally we're selling to the dealer who is providing that product to the customer. That ranges from coin dealers, banks, brokerage houses, pawn shops. It's a fairly liquid market at this point.
Is there a buyback arrangement with the Mint, or once you buy them, they're yours?
No, the Mint strictly sells.
Right.
They do
Okay,
not.
and another quick question. Right now, I understand that I can't go to the Mint and buy bullion coins. Would there be anything wrong with that?
Well, the Mint's not capable of handling that. First of all, they can't handle a two-way market because they'd have to hedge their position, which they have absolutely no experience or knowledge in. It would be overwhelming, actually, for the Mint to take that position. The spreads would be too wide if they did get involved in it. Yes, it would be wrong.
But they still sell proof sets. Is that correct, the Mint?
The Mint still sells
to individuals.
numismatic products to individuals, yes.
No other questions. This hearing is adjourned.